It is time to show you some of the technicals that you should be watching for on Nvidia. I'll also show SPY, QQQ, IWM, Bitcoin, and Tesla. So some things that we need to be paying attention to in the charts that I think are going to be highly critical and highly impactful to us. This is being recorded before the personal income and outlays numbers at 8:30 a.m. on Friday, August the 30th. So we'll see how those numbers impact things. I expect them to come in well. We'll see how that does. So let's pop up Nvidia. Nvidia, I said in my video yesterday, I said, watch this 50. We could possibly bounce off of that. So far, we didn't get that bounce. We are about where this previous low was over here, potentially going to retest that 50 today. We're going to have to watch and see if we get another rejection or if we bounce back through it. If we go back to some previous times over here, we sold off down through that 50 pretty significantly. On the carry trade, did not quite make it down to the 200-day. That was pretty wild to drop down there so quickly, but also just a very quick recovery. And right now, across the tops of these things, we're down below the trend line. I actually have some pretty crazy technicals on here. We'll talk about those later. In the meantime, just what I want to pay attention to on these charts is, let's specifically look at this part right here. I'll put it in the center of the screen for you. From where we're at right now, if this support holds at this level that we're seeing, and in the pre-market hours, we're trading up about $1.70-ish, $1.67 as I talk about this from where we bottomed out yesterday, is that we would pretty much have even low point there and low point here with this low point in between. There's a potential for an inverse head and shoulders here. I don't know that we're going to see it. We do need to climb back above the 50-day, especially if the value that we have here holds. Honestly, it could even go a little bit lower from where it's at right there because the neckline would actually be slanted on this one anyway. So you might have a slightly asymmetric one where the right shoulder is a little bit lower than the left shoulder. And not the most favorable look that you would want to have. Even would be a lot better if you would have the right shoulder a little bit higher than the left. I think that'd be even more favorable, but still not necessarily bad shape. We have the RSI for this just crossing down below 50. So as per momentum, bearish momentum is starting to creep in. We'll see if that support holds instead. The 50 can be a massive area for a bounce. We actually saw that going back here, that we were down below the 50, retested it, but kept climbing anyway, and eventually finally broke through it. And that's where we had that last massive rise, especially following their previous earnings. So this time, I mentioned before that I have a lot to talk to you about earnings. It's not going to happen in a Friday morning pre-market video. It will happen this weekend, though. I'll be putting out that video with just a massive breakdown of what I think is coming for us in the future for Nvidia. I do stay bullish on this long term, even if we experience some near-term pain here. And in here, I'm talking more about the near-term trading aspect of this, not necessarily the investing side of Nvidia. So we do want to make it back up above that 50-day to continue the bullish direction. If we hit our heads on it, then we can possibly travel further south if we get rejected off that resistance that might happen to be there for us. Now, as for today specifically, if we look into the technicals that we have here and consider the fact that it's Friday, I think that we're going to get a cliffhanger ending for Friday. So maybe that's something that puts us up near the 50-day, up here near this critical support that I was talking about. I'll leave that there for you for that critical support. 119, 120, those two values are actually pretty huge for us in terms of support. So maybe we'll be sitting right on it, sort of like we were yesterday. Maybe we'll come to the bottom of this trend line that we actually close up above the 50, which would be a fairly good sign to actually have that broken. And then we would just be watching for a full candle close above it. So we're going to have to see what that brings for us. I think we could even find ourselves maybe even possibly somewhere in this support area. So the range for today, if I had to guess, and this is just a guess based on the technicals that are here in front of my face, 115 up to probably about 123. So that $8 range, and we're at 119 right now. So about $4 swing in either direction by the time that we close. To me, that would actually give a very good cliffhanger type ending going into the weekend, giving people a big old question as to what exactly is going to happen next week. When the market does close, I'll be taking a look at the technicals as well, and we'll start to talk about what next week could possibly look like. Please keep in mind that we have a 3-day weekend, and next week is it's an enormous week in terms of the economic report catalyst that we have. The jobs numbers come out next week. So if we get something red setting us up into the weekend for the overall indices, and I will transition into those, next week is huge. Yeah, we got the GDP numbers. GDP numbers were strong. Today, we're going to check out PCE. We want to see those come in soft, but not deflationary. And then when we look at next week's jobs numbers, any sniff of recessionary pressure for that could be downward pressure for the markets, and anything that tells us that, hey, Goldilocks scenario is on, the economy stays strong, labor market is continuing to improve from where it's at, or at least stay stable from where it's at, stable or better is a good thing. If we get unemployment coming in at higher than 4.3 itself, not going to be great. Higher than 4.3 is going to be pretty awful. I think it's going to be a lot of downward pressure for the markets. Lower than 4.3%. If we get a 4.2, I think the markets are going to rally off of 4.2, that we're staying stabilized with that unemployment rate, and we kind of got a fluke type number for 4.3. That's my take on it. I'll give a further take another time. Let's move into SPY. You can see that we're stuck right now in between these resistances and the support that we find below that. And I think that honestly in between here could be that cliffhanger that we see for SPY. Those values, by the way, are 560 to about 563. Up above 563, we have room to 565. Down below that, if we find ourselves in these support areas, there's any number of support in here, anywhere from about 559 all the way to about 553. So I think our overall range for today is going to be about 553 all the way up to about 565 for SPY. For the Qs, as we move into that, let me drop down to the hourly chart for you on that one as well. And again, if we keep on talking in terms of cliffhanger endings, 479 to 483 has been pretty darn tough to beat. We actually have pretty solid support down at 466. If I were to put a range on this, I would say 463 would be the ultimate low that we would get. And to the upside of this, I think 483 would be that top number. I know that's a pretty wide range, but these are volatile times. 479, 480, that's going to be a pretty tough line. Getting over that is going to be pretty darn incredible for us. And actually from these higher lows that we have, a pretty even high here, we could start seeing some of that upward pressure come into this. Still cautiously bullish on where we're at right now. And we're just going to have to see the different numbers that come out. I was cautiously bearish following the last unemployment numbers that we got, the unemployment rate coming in at 4.3%. But then Jerome Powell came out and talked to Jackson Hole, signaled Goldilocks scenario. There's still worries that are out there. There's reasons to remain cautious. It's not full on green lights in my book, and certainly not in my portfolio. That's why I have short hedges out right now. That's why I have a cash position right now, ready to employ that cash wherever I might need to at any time. So moving on from there into IWM, we're up above this trend line, solid for us. And we closed right now in the pre-market, I should say, we're up above 220. That's a good thing. And small caps, if we stay Goldilocks based, that's something that we could see this price target for that I have up here. Not that one, this one, there we go, of 228. That could be very strong for us. A very strong likelihood that we get up above this red line, which is right around 225 to 226. So could be a good day for the Russell 2000 stocks. Be on the lookout for that. And if we end up with a cliffhanger ending here as well, honestly, it could either be at the top of this support or that we find ourselves right in the middle around 222 to 223. We'll see what it brings. So moving over into Bitcoin. Bitcoin right now, I redrew this trend line as we started to get these new bottoms here. We actually get a nice little trend line off of this. Some buying pressure coming in as we find above this support area. We need to try and clear this resistance. It's going to take a significant amount of momentum to get there. So for Bitcoin, we want to see that push up. Definitely, we got to break 60,000. Breaking 60,000 is going to be that first hurdle, allowing us to get up to these upper price targets. If we can't do it, then these lower price targets get activated, and they're going to be rocking 24/7. So we don't get a break over a 3-day weekend for Bitcoin, so we'll watch what happens for that. Tesla moved my support and resistance from yesterday's price action. We actually hit on Wednesday. We hit the price target that I had. New price target down here at 199 for down below. Up above, we have room. If we get up above the 50, which is about 211, 212, we'd have room up to 216 for this top trend line that's up here. And guys, I think it could be still a pretty exciting day in the markets, even though it is a Friday. Could be some profit taking some areas. Could be some people just closing out for the long weekend. And I think that is to be very much expected, especially with next week being the start of September, which is historically not a great trading month. All the jobs numbers, the fear of seeing anything that's going to tell us about recession that's going to break that Goldilocks scenario. That mess could start today if there is going to be one. Some of that mess with some of that fear and uncertainty now could come in Tuesday, next week when we pick up trading again. Regardless of what happens, guys, I'm going to come back and report on what I see and what I see going forward from there. If you guys want to see my buys and sells, if you want to talk to me and my community members, there is a link down in the description for the Patreon. And also, when you get over to that Patreon, after you sign up, jump on over to the Discord because that's where you're going to find us. And then down in the description is also a link for a technical analysis trading course. If you click on that, sign up for the course. It is through Stockmo Academy. The bread recipe is there. It's a trading strategy, clean, easy setup, walks you right through it. Also tells you about all the technicals to look for. I have a chapter in there on options myself, and I think it's a wonderful course. And the bread recipe, the trading strategies that is in there helps you for movements upward and movements downward, so you can trade in either direction off of those, and a lot of people are finding a lot of success with that. Guys, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.